Welcome to The Explainer. Look, Charlotte is undergoing an absolute transformation this year, and we are going to do a fast-paced, structured breakdown of the interconnected forces that are completely reshaping its economy and its housing market right now in 2026. If you're buying, selling, or honestly just keeping an eye on the market, you've got to be asking yourself this central question. What is actually driving this specific boom? We aren't just talking about a rapidly growing metro area anymore. We're witnessing the real-time evolution of a maturing economic powerhouse. It's a fundamental shift in how the city operates and who exactly is moving there. Okay, let's dive right into this. Here's our agenda for today. We'll start with the Queen City boom, cover corporate and startup expansion, break down the $19 billion transit plan, look at luxury real estate shifts targeting transit corridors, and finally, moving forward in 2026.
All right, part one, the Queen City boom. So here's the foundational catalyst for all of this evolution: explosive job growth and unmatched domestic migration. Charlotte added nearly 38,000 new jobs in 2025 alone. That pace completely blows past a lot of larger peer metros across the country. And when you pair that with the fact that North Carolina is a top state for domestic migration, the result is pretty staggering. 157 people are moving to Charlotte every single day. Seriously, if you've tried to find parking downtown recently, you absolutely know what I'm talking about. But economically speaking, that creates an incredible, sustained baseline of demand for housing.
Moving right along to Section 2, corporate and startup expansion. So who's actually creating all these jobs? Well, high-profile corporate relocations are really the anchors locking this historic growth into place. Just look at the caliber of the companies planting their flags here. Global brands like Scout Motors just announced their new global headquarters in Charlotte's Plaza Midwood neighborhood, creating 1,200 new jobs. What's really interesting about this is how actively it's bringing highly paid executives and specialized talent straight into the city's core. And you know what? The data completely backs up this corporate confidence. In the first quarter of 2026, Charlotte's office market recorded 1.6 million square feet of leasing activity. Guys, that is more than triple the volume from the exact same time last year. It's a 5-year quarterly record, driven heavily by financial services giants like JP Morgan and Charles Schwab just taking massive footprints. Corporate America is literally buying into Charlotte's future. Which brings us to Section 3, the $19 billion transit plan. You simply cannot add 38,000 jobs and millions of square feet of office space without upgrading the infrastructure, right? So let's look at the actual fuel of this boom. Recently, Mecklenburg County voters approved a 1-cent sales tax referendum that's projected to generate roughly $19.4 billion over the next 30 years. It's split up pretty cleanly: 40% to roads, 40% to rail, and 20% to buses. This is the largest single source of new infrastructure funding in the region's history, and it is going to fundamentally reshape how people commute. The city is essentially placing multi-billion-dollar bets on future connectivity in every single direction. This brilliantly illustrates exactly where those bets are going. The rail expansion targets every corner. The Red Line heads north to the Lake Norman towns, the Silver Line cuts west to east from the airport over to Bojangles Coliseum, the Gold Line streetcar extends right through the center, and the Blue Line pushes even further south down to Pineville. But here is where we connect the macro level down to the micro. The city set aside a $1.5 million small business readiness fund. Now, why does that matter for real estate? Because this fund ensures local businesses are trained to actually win those massive transit infrastructure contracts. When transit dollars stay local, business owners hire more local workers, spend more money in town, and buy homes in local neighborhoods. It's a direct injection of wealth right into the communities surrounding these new transit lines. Let's pivot to Section 4, luxury real estate shifts. So how is this massive flood of new executives, job creation, and infrastructure cash directly reshaping the local luxury real estate market? Well, the most important thing to grasp here is that the market has fundamentally shifted. We are totally out of that frenzied, chaotic, extreme bidding war era of 2021 and 2022, thankfully. In Q1 2026, data rules. We have a balanced, data-driven market. Luxury inventory is actually up 26.4%. Buyers finally have some options and leverage, while sellers are still benefiting from strong, sustainable price appreciation. It's a market that rewards precision over wild speculation. And we have to remember, the luxury market is definitely not monolithic. Just look at how these different price bands perform completely independently. The 1 to 2 million band is super liquid, turning over in just 52 days. But where's the real action happening? It's right there in the $2 to $5 million range. That is the absolute sweet spot of Charlotte luxury right now. It saw a massive 14.5% year-over-year appreciation. There's enough inventory to give buyers options, but still enough fierce demand from relocating executives to aggressively protect property values. You might be wondering, why are so many out-of-state executives buying specifically in that 2 to 5 million range? It really comes down to what market analysts call wealth arbitrage. Buyers are fleeing high-tax states like California, New York, and New Jersey, basically leaving those brutal 10 to 13% income taxes in the rearview mirror from North Carolina's flat 3.99% rate. For a lot of these executives, the annual tax savings alone practically buys the house. All right, Section 5, targeting transit corridors. Now that we really understand the economics and we've seen the transit map, let's talk about how you can use this data to pick the absolute best neighborhood for your next purchase. Charlotte's luxury submarkets behave very independently, so you really have to match your strategy to the specific neighborhood profile. Places like Myers Park and Eastover, they remain the crown jewels, perfect for C-suite and legacy buyers. South Park and Ballantyne are huge magnets for finance pros and corporate relocations. Up north, Lake Norman is offering this incredible waterfront appreciation trajectory. But whatever you do, do not overlook East and West Charlotte. These areas have been historically undervalued, and they are sitting directly in the path of that upcoming Silver Line rail access. So the crucial point is exactly this. Decades of transit-oriented development studies from other major cities have a very clear, proven conclusion. To quote the research directly, homes within a comfortable walking distance to a station tend to hold lasting demand. Buying a property along the upcoming red, silver, or gold lines before they are fully built out, that is without a doubt one of the smartest, data-backed, long-term real estate plays you can make over the next 5 years. And finally, Section 6, moving forward in 2026. How do you take all this incredible data and translate it into a real, actionable strategy for the rest of this year? First off, you have to consider the cost of waiting. Mortgage rates have stabilized near 6.1% as of Q1 2026. Now, I know a lot of people are sitting on the sidelines crossing their fingers for a magical return to 3% rates, but honestly, history shows us that waiting for a perfect rate drop often backfires. Because when rates do drop, a fresh wave of buyers suddenly floods the market, inventory compresses, and prices shoot up way higher than whatever you might have saved on the interest rate anyway. Locking in current pricing right now in a balanced market is historically a much safer bet. Which leaves us with one final big question. Are you ready to position yourself in front of this boom? Look, Charlotte is not waiting around. The corporations are moving in. The $19 billion in transit is mapped out and funded, and the luxury market is maturing beautifully. The data heavily supports taking action, not hesitation. So take these insights, look really closely at those transit corridors, and start mapping out your own wealth advantage in the Queen City. Thanks so much for joining me on this explainer. I'll catch you next time.